This is the Asia Trade. I'm Shery in Tokyo.
And I'm Annabelle, Droulers in Hong Kong. The top stories this hour. Asian stocks prime for early gains as US and global equity gauges hit fresh highs. Intel soaring on a $5 billion investment from Nvidia. President Trump says he could further extend a trade truce with China when he speaks to President Xi on Friday, and also finalize the US TikTok deal. And a turbulent Japanese political climate likely to keep the BOJ on hold today, but potentially opening the door to an October rate hike.
But take a look at the feat that we saw on the Wall Street session. The four major benchmarks hitting record highs together. We haven't seen that since 2021. It's also pretty rare because we've only seen it 25 times this century, and really led higher by those tech stocks with that $5 billion investment from Nvidia into Intel. So we'll also be watching those Asian suppliers, including Laser Tech here in Japan, that gets 28% of its revenue coming from Intel. But also the move in treasuries was interesting in the overnight session because we saw that big reversal after the Fed rate cut. Actually, the 10-year yield seeing its biggest intraday gain since June, and that on the jobless claims numbers dropping by the most in about 4 years, unwinding some of that big jump that we saw in the previous week. So take a look at how the Japanese yen is also holding, because we saw that weakening towards that 148 level against the US dollar, with that big jump in the Bloomberg dollar index by the most in about 2 weeks or so. We do have the BOJ expected to hold rates steady today. We also have inflation data this hour to contend with. And take a look at the broader Asian currencies, because we saw also big moves when it came to the Kiwi, the Aussie on data. Second quarter GDP miss big time for New Zealand. So we see those RBNZ rate cuts expected, so that really leading to that drop. We also had employment data in Australia missing, and that leading to that big drop in the Aussie as well. When it comes to the yuan as well, we were really watching those big moves against the US dollar as well, because we saw the first fall against the greenback. We have a lot of volatility in Chinese stocks in the overnight session. You can see the Golden Dragon China Index as well falling almost 2%, with that big reversal that we saw in the CSI 300 really taking a breather from that recent rally, Bell.
Yeah, absolutely. It's been a stellar run for mainland equities. But, of course, trade tensions very much in the spotlight, with President Trump indicating he may further extend the trade truce with China when he speaks on Friday with President Xi Jinping. Now, this call is going to be the first direct engagement since June between the two leaders. Our senior U.S. economy and government editor, Derek Wallbank, joins us for more. And Derek, yes, we're expecting something on TikTok, but beyond that, what is going to be considered, I guess, a success from the call later today?
Well, it's a sort of call that's going to be potentially incredibly broad. These things can go in multiple subjects, sometimes multiple hours. There is an awful lot to discuss between China and the United States right now, not least of which that Donald Trump mentioned just as he was coming back from the United Kingdom, that he continues to be upset with Russia's prosecution of the war in Ukraine, and suggesting that there needed to be more done to potentially impact the Russian economy through potential restrictions on energy. Anytime you see that, you have to read in the word China, because China is right now not subject to those sorts of things in the way that India is in terms of U.S. tariffs. So there's a lot on the table here. I think a lot of the previous conversations between Trump and Xi, people have been talking about wanting to see tone. It's been about, is this what I like to call happy talk? Are the good feelings, good positive? And there's certainly some of that, right? We're looking for details, a confirmation that there's going to be a Trump-Xi in-person meeting later this year, where some of those big issues could get ironed out. You're looking for progress towards a potential big overarching U.S.-China deal that Trump really wants and Xi really wants, and has been a little bit elusive so far. So those are some things. But there's also a lot, I think, on the table that could be actually nailed down. So I'm looking to see if we go past just happy talk and we get into some of those specifics, and really if we get some of those specifics nailed down.
Derek, when it comes to President Trump domestically, he's facing a different controversy over freedom of speech, now threatening licenses of TV stations that criticize him.
Yeah, I'm in Los Angeles right now, and this is by far the biggest story in Hollywood. The question over what's going to happen with popular late-night TV host Jimmy Kimmel, who made some controversial comments about conservative activist, the late conservative activist Charlie Kirk. There has been pressure from TV affiliates to not air that show. Kimmel is currently off air, and how that's going to resolve is a big question. But there has been a bigger question, I think, in terms of a kind of national regulatory precedent with the involvement of the FCC and that chairman, who Trump has said is doing a very good job. And he and Trump both talking kind of openly about the issue of television broadcast licenses. Now, in the United States, television stations that are broadcast over air, that are sort of free to receive, have these broadcast licenses, and they're sort of overseen by the FCC. It's historically been a very nominal thing, and they haven't really been subject to a big challenge over the content that they have on their programming. There's been a big sort of kind of like an inseparable church and state kind of wall between the two. But Trump was saying to reporters today, if most of that programming that he sees is anti-Trump, is that really something that is complicit with the idea of a public broadcast license? Is that something that should be going on there? And it winds up being a very different posture, I think, than most any other president that I can remember has taken towards these networks, towards the media, towards the press broadly. It is a very big change. Now, Trump has talked about this idea of TV licenses for a very long time, but the idea that you are seeing now a world in which Kimmel is off air, in which Stephen Colbert was canceled separately by CBS. CBS has said that was due to to costs and other things, and not the content. But in this sort of world, those comments are taking on a very, very new significance. And as I say, biggest story in Hollywood going right now.
Yeah, unprecedented, the political climate in the U.S. Our senior editor for U.S. Economy and Government, Derek Wallbank, there. And also, President Trump due back in the U.S. shortly after wrapping up his state visit to the U.K. President Trump had a state dinner at Windsor Castle with a series of meetings with Prime Minister Keir Starmer. The U.K.'s efforts to dazzle Trump seem to have worked, with the two leaders stressing common ground despite little movement on issues including trade and Ukraine. Trump did rebuke Starmer for his decision to recognize a Palestinian state at the UN General Assembly next week. The tone was also cordial as the two leaders signed a new tech agreement earlier. Starmer hailed a record figure of almost $340 billion in bilateral agreements. Microsoft, OpenAI, and other U.S. companies say they will pump tens of billions of dollars into technology infrastructure in the U.K. At one point, Trump even joked about AI and Nvidia CEO Jensen Huang, who was in the audience.
We're taking the next logical step with a historic agreement on science and technology partnerships, and this will create new government, academic, and private sector cooperation in areas such as AI, which is taking over the world. I'm looking at you guys. You're taking over the world, Jensen. I don't know what you're doing here. I hope you're right. All I can say is we both hope you're right.
Well, for its part, Nvidia says it plans to invest $2.7 billion to support the UK's artificial intelligence industry in partnership with several VC firms. Huang says he plans to invest in autonomous vehicle tech developers Wave and Oxa, as well as the fintech company Revolut and several AI startups. But back in New York, of course, the big story was Intel shares that soared after Nvidia agreed to invest $5 billion in the chip maker. That's really a surprise move that's going to see the two firms co-develop chips for PCs and data centers. Let's get on now with our Bloomberg Tech co-anchor, Ed Ludlow, who has the details for us. And Ed, of course, you were at that press conference today with Jensen and Lip Bhutan as well, going through the deals of this partnership. I think we saw the reaction in Intel. But what exactly is at stake for both companies, and what are they going to get out of this partnership?
Yeah, I think, for Intel, this is the biggest move on the stock since 1987, and the word historic was thrown around a lot, and it is historic, right? These are two names in literally Silicon Valley that are at the origin of the Silicon Valley story in Intel's case, a relative newcomer in Nvidia's case, where the world order's just different present day, right? Nvidia leads the world and Intel has fallen behind. Their HQs are 1 mile apart and split by a freeway. So the first question on everyone's mind at this press conference was, what role did the administration and President Trump play in this arrangement? The answer is none at all. Listen to this.
The two technology teams have been discussing and architecting solutions now for probably coming out to a year. The two architecture teams, well, it's 3 architecture teams, are working across, of course, the CPU architecture as well as product lines for server and PCs. And so the architecture work is fairly extensive. And the teams are really excited about the new architecture. And so the teams have been working a while, and we're excited about the announcement today.
Quickly, if they had been working on this for more than a year, that would predate Lip-Bu Tan's tenure as CEO of Intel, and it would predate the closer relationship that the president has established with Jensen Huang, although Huang did say that he assumes the administration is supportive of this arrangement.
Yeah, we can't forget that the U.S. government's stake in Intel has now soared with this 20+% gain in the share price, right?
Yes.
But what do we know about Intel's business, because it has continued to lose market share, and how could this help?
It has continued to lose market share, but the mechanics of how this is going to work is really important. x86, which is the architecture that Intel designs its CPUs, are still commonplace in data center. To this point, Nvidia puts the GPUs into data centers in the form of literally server designs. And they've been focused on ARM-based designs. Now they're going to also do Intel. And the way that Huang explained it to my question to him is that it's simple. You just swap in the Intel-based CPU. But it goes back to the discussion on, well, why are they also doing an equity stake? And the explanation on that was, well, if we believe that these products we're working on present a big addressable market for both Nvidia and Intel, not just in data center, but in PC as well, where Intel provides the CPU component and Nvidia the GPU or graphics component, then of course we're going to do an equity investment, because we will see a return on the success of the strategy that they're both pursuing.
Yeah, of course, Lip-Bu Tan really at the start of what's going to be a very long turnaround effort for the company. But also interesting to track in the session the shares of AMD and the pressure they saw, because what does this mean for them?
Yeah, I wish we had hours to talk about this, because in the history of Silicon Valley, all 3 of these names have jostled for position. So when Nvidia is partnering with Intel on PC, that is going directly after something that AMD has a slight lead on with against Nvidia in that space, in the sort of system on a chip domain. And so it's completely not a surprise that AMD fell. ARM also fell significantly, right? Because I just told you that Nvidia's also now going to do Intel-based CPU. Historically, it's been focused on ARM-based CPU. And in the press conference, Huang said, by the way, we're still doing ARM-based CPUs. And the stock paired its decline. So because Nvidia leads the world in these markets, the market was trying to decipher in real time, who's being displaced and what does this mean for the status quo and where these chips are going. And I think we're still asking that question today, and we will tomorrow.
Good to have you with us. Bloomberg Tech co-anchor there with the latest on the Intel and Nvidia. And coming up on the Asia trade, JPMorgan Securities joins us to look ahead to the BOJ's rate decision due in a few hours. Amova Asset Management explains why they believe CPI risks in Japan support a rate hike by year-end. Plus, CSIS will be with us as we examine what could come out of that phone call between President Trump and Chinese President Xi Jinping. Much more ahead. This is Bloomberg. The Bank of Japan is expected to keep its benchmark rate unchanged at today's policy meeting. All 50 economists surveyed by Bloomberg say borrowing costs will stay at 0.5%. Let's bring in Bloomberg senior Japan economist Taro Kimura. Taro, so we're not expecting any change on the benchmark rate. So what will you be watching?
So basically, I'll be watching how Governor Ueda will signal about towards the next rate hike, the timing. My bet is on October. I think it's still a viable timing, but at the same time, given the political uncertainty, we are not sure who's going to be the next prime minister. And actually, the two leading candidates, Koizumi and Takaichi, has a totally different view, probably on the Bank of Japan policy. So the Bank of Japan is still wait and see mode. But at the same time, I think he will leave the door open for October rate hike, probably stressing out the progress of U.S.-Japan trade deal.
So then, Tara, what are you going to be listening out for in the call in particular? What's the tone that you're going to be most listening for?
Right. I think the Ueda's signal is going to sound mixed in a way that, although I believe he will stress, as I said, the positive side from the U.S.-Japan trade agreement, I think he won't update his view on inflation, although I think we're going to having a latest print in 20 minutes, 15 minutes. It's going to stay hot above BOJ's 2% target, but I don't think he will steer clear about his assessment on inflation in order to avoid looking hawkish. So, important thing for Ueda is he needs to keep current yen's level against the dollar because still the latest the yen's level, although it's strengthened year to date, but still weak for exporters. And it's important for Japanese exporters who need to deal with elevated U.S. tariffs. So I think basically Ueda is going to send both dovish and hawkish signal. I think a little bit tilt towards hawkish in my view, but still sugar-coated with many dovish comments.
Is that because we have seen a stronger economic data print, not only on the inflation data that we're expecting today? What's been the economic backdrop so far?
Exactly. I think in a vacuum, I think Japan's economy is really solid despite the elevated U.S. tariffs. As you know, GDP print was good. I expect the production won't be wreaked havoc by the U.S. tariffs because of the yen's weakness. So therefore, in a vacuum of inflation and economy, the BOJ is ready to pair stimulus, but they want to see the timing, which is politically conducive for them to pull the trigger.
That was our senior Japan economist at Bloomberg Economics there, Taro Kimura, talking about the BOJ decision, very much expected to stand pat today. But the BOE, of course, the Bank of England, has also kept interest rates unchanged at 4%. And cast doubts over the prospect of more cuts later this year. Policymakers say future cuts will be gradual and careful, citing concerns over resurgence in inflation. Traders don't expect any further easing this year and are only fully pricing in one more quarter-point reduction by the end of 2026.
So I think the sensible thing is that we've been on hold today. We'll see how the news unfolds in the period to come. I mean, I continue to think that there will be some further reductions, but I think the timing and scale of those is more uncertain now.
Well, let's take a look at the snapshot of markets on Wall Street overnight. This is something we haven't seen going all the way back to 2021, and actually something we've only seen a handful of times this century. But essentially the S&P 500, the NASDAQ, the Russell 2000s, the Dow Jones, all of those soared to all-time highs in unison. Really can't underscore how rare that is, but let's discuss the moves now with our MLive strategist, Mark Cranfield, joining us. So, Mark, I mean, should this sound the alarm bells at all, just given you've just seemed to have that optimism continuing in equity markets?
I think it's a pretty interesting reaction. Yesterday there were some reports suggesting that Jerome Powell was hawkish in his press conference after the FOMC decision. It doesn't look as though the US stock market thinks he was hawkish at all. They seem to think that he was pretty dovish. I think it's a testament to the signaling which we've seen this week is that the Federal Reserve cut interest rates. They pretty much promised there will be a few more interest rate cuts to come. The US economy is doing extremely well. The GDP numbers have generally been on the positive side in recent data. Although the jobs market is slowing a bit, it's not disastrous. Companies are earning lots of money. The AI story still seems to be generating a lot of excitement. We've just had Nvidia investing money in Intel. Can you imagine that happening 20 years ago? So the signaling for the moment is still that there's momentum. People want to get involved. We're coming up towards the end of the quarter as well. It's not the kind of time when portfolio managers will want to be showing that they have less exposure to the United States, if anything more. So for the very near term, it looks as though the stock market in America is pretty well supported. And given the outlook on interest rates, it can probably run at least through towards the end of the year. Whether this is a bubble or not, as Ellen Greenspan used to like to say, we'll only know afterwards. But certainly valuations are very stretched. But they've been stretched for quite a while. And still nobody is giving up on the idea. So it's probably got a bit further to run.
And also the moves in the Treasury space seems pretty interesting. I mean, the 10-year yield, the biggest intraday gain since July or so, really caught between that idea of further easing, but also we continue to see solid data.
I think if you look at what's happening with Treasury yields, nothing moves in a straight line. But if you look back over the past few months, yields are gradually grinding lower in the United States, and they'll probably continue to do so. We've had that the curve has been flipping around, but it's probably steepened enough. And it won't be too long before people start looking for a grab for long-term yield. If they can still catch 4% somewhere or slightly higher, they're probably going to go for it because corporate yields are coming down dramatically. The spreads between corporates and treasuries are getting tighter and tighter. And that, in fact, will work in favor of people that need to be involved in government bonds. So you'll probably see less volatility in the treasury curve, but gradually yields coming down a bit because people know the end game for the Federal Reserve is short-term rates towards 3%. Well, if you know that that is where you're ultimately ending for, anything above 4% is starting to look reasonably attractive for Treasury investors. It won't be exciting, but you can expect yields to gradually move down towards where that ultimate Fed target is likely to be.
Mark Cranfield, our MLive strategist, good to have you with us with that perspective. And we have more on the Asia trade. This is Bloomberg.
The latest from the corporate front this morning, and Bloomberg's learned that Sumitomo Mitsui Financial Group is considering whether to boost its stake in U.S. investment bank Jefferies. Sources say the Japanese lender may invest some $677 million to raise its ownership to 20%. Jefferies shares hit a 7-month high in New York. The two firms are also discussing merging parts of their equities businesses in Japan. Hyundai has raised its revenue forecast for 2025 while lowering its profit margin outlook by 1 percentage point. The car maker is increasing its spending in the US to get around tariffs on imported vehicles, although its plans have been complicated by the stalled trade negotiations. The company is also aiming to strengthen its hybrid lineup to boost demand in North America. India's securities markets regulator has cleared the Adani Group and its billionaire founder Gautam Adani of some allegations raised in 2023 by the US short seller Hindenburg Research. It's found no evidence that Adani used so-called related party transactions to move money into its listed units. Adani's welcomed the decision, repeating that claims made by the now defunct Hindenburg were baseless.
We have breaking news out of Japan. We are getting the latest CPI numbers. The August core inflation data rising 2.7%, coming in line with expectations. The headline number is growth of 2.7%, slightly below expectations and also decelerating from the previous month. Both the core CPI and the headline CPI are decelerating below that 3% growth level, but still above the inflation target from the Bank of Japan. Of course, we are expecting expecting that decision to happen today. We have seen some energy subsidies that could really push down these inflation prices. But at the same time, we have food prices continuing to be higher, rising wage costs as well, that have driven the price inflation higher for Japan. So again, the national CPI coming in year-on-year growth of 2.7% below expectations. Core CPI also at that 2.7% level for the month of August. But of course, the implications of not only inflation data, but domestic politics, very important for the Bank of Japan, as we have candidates that have different monetary policy views. Conservative Japanese hardliner Sanae Takaichi and government spokesman Yoshimasa Hayashi have both joined the LDP leadership race. That campaign is set to start next week with a vote scheduled for October 4th. Let's bring in Bloomberg economics and government reporter Yoshiaki Nohara. Yoshi, so let's talk about Takaichi first, because we have continued to talk about this candidate as reflationary, perhaps a continuation of Abenomics and easy policy. What are we expecting from her?
So far, you're right. There's a lot of expectations based on what she said in the past, how she supports monetary policy and aggressive fiscal spending. But you have to keep in mind, Shery, that she hasn't spoken specific policy measures at this point yet. And she's expected to hold a press conference later today. So people will be watching for any signs of which policy direction she's likely to take if she wins.
What about Japan's top government spokesperson, Yoshimasa Hayashi, because he also held a press conference and outlined his policies as well. What did we learn?
So one of the key points he highlighted was he's going to aim for sustainable growth of real wages, 1% annually. So that is pretty much consistent with the current administration thinking. So meaning that he's seen as a continuity candidate, meaning that we're not expecting much deviation from how Japan is doing its policies so far.
When it comes to the vote itself on October 4th, we understand that it's a full spectrum vote. Will that have any implications about who could actually benefit from this format?
Well, it is difficult, but you have to remember that all the 5 candidates we are monitoring at this point, they also ran last year as well, only just a year ago. So meaning that the question is that who's going to be able to win the ground left vacant by the departing Prime Minister Shigeru Shiba. And there's going to be a lot of competition for that vacuum of power and votes behind the scenes. And that's how we are monitoring this race closely.
Bloomberg economics and government reporter Yoshiaki Nohara there with the latest on how the LDP leadership race is shaping up. Of course, domestic politics also a factor when it comes to potential rate hike decisions coming from the Bank of Japan. Let's bring in Ayako Fujita, chief Japan economist at JPMorgan Securities. Ayako, always good to talk to you. And of course, we know about central bank independence here in Japan, but domestic politics and fiscal spending and the outlook of that is consequential for monetary policy. What are we expecting from the Bank of Japan after today's meeting, where nothing is expected to happen in terms of the rate?
I think actually, of course, the all incoming data support BOJ's rate hike anytime soon, because inflation is clearly elevated, and even though actually headline inflation came down this morning report, but still actually this is pretty much affected by energy subsidies. And, also actually even in underlying inflation, because we still have an impact on the high school education fee. So which means actually a lot of actually policy measures is actually suppressing the inflation. So if we remove all these things, inflation is certainly actually well above 3%.
And with potentially more fiscal spending to come from any candidate who becomes the next prime minister?
I think, I agree. Actually, probably, Takaichi actually last year advocated for aggressive fiscal policy, and also actually, she also advocated to actually suppress actually, BOJ's move. So, which is actually a little bit actually kind of worrisome. Actually, of course, that might have some impact on BOJ policy, but in reality, I'm pretty much actually, very much watching for actually what Takaichi is going to say this time, because macro environment has already shifted compared to last year. So, whether or not actually we have room for fiscal expansion, aggressive fiscal expansion, without causing inflation problem, is quite a big question. So it's not, even regardless who will be elected, of course, actually, the kind of, the choice for macro policy seems to be relatively limited. But of course, actually, we can probably expect some kind of sort of interference from the government side, depending on the candidate.
Especially at a time when we seem to have some sort of resolution with U.S. tariffs, and the U.S. economy seems to be pretty strong as well.
Yeah, I think that's a big actually focus for this upcoming meeting, because of course, actually, market has already become more optimistic about actually outlook for going forward. But the question is whether or not actually BOJ can actually, get that kind of actually change in market sentiment, because the corporate sentiment has already been improved, and probably we expect actually quite strong actually BOJ upcoming turn. But yet actually still actually the BOJ's message actually we received so far seems to be actually very pessimistic about actually U.S. outlook going forward. So that's the biggest actually kind of concern for us, actually whether or not actually BOJ can really deliver in rate hike in October, because our call is still in October. But question is really actually BOJ can get quite very much updated market view, or actually BOJ still stick on the very pessimistic view actually based on actually previous IMF reports.
Yeah, that's interesting, because yesterday we saw the Fed, for instance, just slightly upgrading its growth forecast. So how do you think then that the BOJ is likely to interpret the meeting?
I think, of course, actually, the BOJ is pay a lot of attention, actually, Fed assessment on U.S. economy. So that, certainly, actually, yesterday's actually the FOMC and actually decision and messaging from Fed gives a little bit of confidence for BOJ. But still, actually, so far, actually, we got a little bit of message that actually BOJ is still see actually the higher downside risk going forward. So it's kind of a tone might change a little bit, but the question is whether or not actually BOJ can change the tone actually drastically. Because particularly, actually, this meeting, actually today's meeting, actually BOJ doesn't publish outlook report, so it's kind of actually how much actually kind of flexibility BOJ can have without having actually outlook report release is a bit of a question.
Yeah, so then, given that the BOJ does seem to be a little bit more pessimistic, I mean, maybe it makes sense then that their terminal rate right now is at 1%. But do you see sort of any adjustment to that moving forward?
I think for sure, actually, we don't expect actually 1% as a terminal rate, because if actually we are right and actually inflation to continue to remain elevated, actually terminal rate 1% suggests actually Japan's zero interest rate remains deeply negative for long. So I think actually BOJ is probably planning to raise policy rate actually well above 1% actually going forward. Of course, the pace is very gradual. So our expectation is actually from now on, actually particularly after BOJ deliver one more hike, BOJ will start sending signal to actually to change market expectation to actually bringing up actually market expectation of 1% terminal rate. That's going to be actually quite a big focus, probably next 6 months to 12 months.
So what then do you think is going to be the tone that Ueda then strikes in the press conference later today? It's quite interesting that more than half of the BOJ watchers that we surveyed think that he's got a tendency to sound a little bit more dovish on occasions when the rate has been left unchanged, and then surprise traders as well in other meetings with the outcomes in the subsequent meetings. So what do you think is going to say in that tone is going to strike as well?
If governor said quite dovish tone, then actually there is a risk for dollar yen to move up higher. So that will potentially, eventually actually, the push BOJ to move. That is actually likely scenario. Actually, we can think about. Actually, we can actually exclude. We cannot exclude that kind of scenario as well. So I think actually, the governor will probably try to balance the tone. But if actually BOJ doesn't signal actually upcoming rate hike, I think actually market will take as a very actually dovish. And it's not just dollar yen actually, because of course dollar yen actually looks actually relatively stable for the last few months. But if you look at actually the cross currency, actually yen has continued to be actually depreciating. So this is actually clearly actually inflationary as well. So I think actually the BOJ is also actually paying attention to cross currency as well. So I think actually this actually it's kind of actually keep postponing rate hike actually it seems to be a little bit risky for BOJ as well.
How much is the BOJ paying attention to the JGB space as well as we continue to see the sell-off in the long end and potentially more fiscal spending coming up?
That's actually clearly worrisome. But of course, actually, the back-end story is actually BOJ is probably expecting actually MF to actually adjust issuance. That is actually primary, actually the policy response to actually take care of back-end. But if actually big fiscal announcement is coming, then that will be a factor for BOJ to move actually more. Because they have to actually probably actually it's going to be actually, BOJ can see it as a kind of risky scenario.
Ayako, thanks for joining us this morning. That was Ayako Fujita, their chief Japan economist at JPMorgan Securities. And some of the other stories that we're tracking, the US has vetoed a UN Security Council resolution demanding an immediate ceasefire in Gaza that was backed by all other members of the body. This is the 6th time the US has vetoed a Gaza resolution since 2023 and underlines American and Israeli isolation over the war. US Councillor Morgan Ortagus says the resolution failed to adequately condemn Hamas. Bloomberg has learned the European Union is planning measures to accelerate its phase out of Russian LNG buying. Sources say the bloc's executive arm is considering a provision to reduce imports earlier than the end of 2027. President Trump has called on the EU to do more to curb Moscow's energy trade. During his visit to the UK, Trump also expressed disappointment in President Putin over the war in Ukraine.
He's let me down. He's really let me down. War is a different thing. Things happen that are very opposite of what you thought. You thought you were going to have an easy time or a hard time, and it turns out to be the reverse.
And President Trump is also asking the US Supreme Court to allow him to dismiss Fed Governor Lisa Cook while she challenges his attempt to remove her. The Justice Department has requested a halt on a federal ruling that allowed Cook to remain in her position. Her lawyers have warned that even a temporary disruption to the status quo could impact the US financial system. And we'll have more ahead on the Asia trade. This is Bloomberg. This is the Asia trade, and we're taking a look at a reversal in the Chinese stock rally that saw some profit taking late in the session on Thursday. But let's hear what analysts are saying about it as well. So Goldman Sachs, for one, says buy the dip. China equity strategist Qin Zhilao notes valuations aren't stretched. There's potential for greater household and institutional allocation as well. He also says the setup for a slow bull market appears more solidly constructed now than ever before, particularly for onshore stocks. Many Asian fund managers, though, on the other hand, might be a little bit more wary. Bank of America's latest monthly survey showed profit-taking and patience before deploying new capital. That marks a sharp U-turn from just a month ago when China ranked second on the overweight list. And the AIA Group CEO Mark Konyn says he's seeing market sentiment in China improving with foreign investors coming in. Speaking to Bloomberg, he also said that the dollar weakness is positive for economies in Asia.
Sentiment has definitely changed on the ground, that's for sure. I don't think we've seen the back of the onflow, the after effect of the slowdown in residential property. That's still a spectre which is hanging over the consumer. But we've clearly seen a mobilization of resources and an alignment of policy which has really galvanized confidence. And it's palpable. You can see it. I spent a day in a workshop looking at China logistics and data centers. Extraordinary growth. All of the things that we've been talking about, Steve mentioned 35 years, all of those things that we always talked about on enormous scale, they're now coming back into play. And there's a real level of enthusiasm and optimism around that. And dare I say it, you're even starting to see foreign investors come back to China. You're starting to see some of the big global pension funds, the sovereign wealth funds, starting to come back in and realize that there's opportunity there that they should be participating in. And there's a sense that if this is we're now scraping along the bottom, this is the right time to be rebuilding positions.
You've invested in Hong Kong for a long time. The Hang Seng Index. Can I trust this one? Because we've had our hearts broken a few times. in just 18 months, not let alone the time before that.
Trust is a big word. I mean, can you make money? Yes. I think that's more the point, and the fact that it's driven by policy as well. So it's really an alignment of policy and action, and getting the IPO market started up here again, and it's phenomenal. On a global level, and it's really infused investors once again. So yes, you can trust that this is real, and there's a lot more to come.
Do we regret not taking advantage? Do you think we will regret not taking advantage of the treasury yields on the table, especially when we think about the end of U.S. exceptionalism, the role of the dollar? Like, where is your head around the entire conversation?
Yeah, so firstly I would say that we don't trade the long end. We don't get rewarded for taking rate risk. So what we do is try and we hedge out as much rate risk as possible. Rate volatility costs us capital, so we try and neutralise that as much as possible. But we do take tactical positions, and we have. During the course of this year, there have been opportunities because of the volatility, and I think that's been one of the sort of trademarks of the market this year. You have tremendous volatility in rates across the curve. I think where we sit today is that most of the action is going to be at the short end. That we're going to see the short end give up, but the long end could go up a little, but not significantly so. So I'm not sure we would be aligned with that and taking more tactical moves. We're very happy with rates where they are at the long end.
A large book of your policies are dollar-based.
Yes.
How does the overall confidence or lack of confidence on the dollar longer term mean for your sales and for your investment opportunities now?
Well, typically when we've seen dollar weakness in this region, it's been positive for the economies across the region. It gives a little bit of headroom in terms of policy flexibility. But what we really want is we want to see liberalisation of the capital markets across this region. The biggest constraint we have in terms of growing our business is, can we find enough deployment? Can we find enough assets to deploy? And if we look at the capital markets across this region, extremely constrained. So here's an opportunity, a slightly weaker dollar in terms of the trend. Will we see the liberalisation that we're expecting? Will we see taking advantage of that headroom? It looks like we're going to be disappointed again. So yeah, so out across the region, China's a big play. This move for offshoring production to avoid the impact of tariffs, sort of aligning with what we saw in previous decades with Japan after the Plaza Accord.
Right.
That's the sort of thing that we're very much focused on, because it's not the same story being replayed again, because these tariffs are rolling out across the whole region. So it's very, very finely balanced.
Chief Investment Officer at AIA Group, Mark Konyn, speaking to Bloomberg's David Ingles and Yvonne Mann at the China Show Subscriber Forum. Take a look at how sovereign bonds across Asia are trading, because we're seeing Australian bonds following treasuries lower. And this, of course, as we had the 10-year yield seeing the biggest intraday gain since July on that jobless claims numbers are dropped by the most in almost 4 years, really showing resilience in the labor market and unwinding that big jump that we saw in the previous week. A different story for Kiwi yields that continue to trend lower. Of course, we had second quarter GDP missing big on expectations, and yields and the Kiwi dollar also plunging in the previous session. We have more ahead on the Asia trade. This is Bloomberg.
Meta shares finished off session highs after the company unveiled its first smart glasses with a built-in screen. The $799 Ray-Ban display can show text messages, video calls and visual results from searches. Chief Product Officer Chris Cox told us more about the new product.
The Meta Ray-Ban displays, you can see we've worked with Ray-Ban to get them into the form factor that people are comfortable wearing. This is the most worn design for a pair of sunglasses or glasses. And so we're starting with something. We didn't want to put something onto the market that was clunky. We're starting with something that's really, really nice. And I'll also just mention there's a waveguide in here.
Okay,
which
a waveguide being?
Basically, it's light that's being projected through a series of mirrors into a small display that appears just below your right eye, and you can actually change where that is.
It's $800, right?
That's right.
But the emphasis over and over again is like, this is a consumer product.
Yes.
It's not for engineers.
That's right.
What is the one killer feature in it then that you think is going to appeal?
Messaging.
Just messaging.
Well,
so
that's,
Mark
if you
Zuckerberg
ask
was
me
talking
for a
about that's how
killer,
he uses it. Yeah.
Yeah, messaging I'd say is going to be the most useful to start. It comes with this wristband, which is an EMG wristband. You wear it around your wrist. It detects very subtle muscular and nervous system sort of activity, so that you can just use a tiny gesture with your fingertips to control essentially a cursor that controls the display. So we've worked to get into something that means that you can use a display in glasses without needing to wave your hands around in the world or carry around a mouse or something like
and this is why evolution is important. The neural band is directly from the Orion project. I remember experimenting with the technology 1 year ago.
So the R&D here is you have the North Star, which you've seen, which is Orion, like you said, and then you're also working forwards from what we know people are comfortable wearing, which is the Ray-Bans. I think we're going to see early adopters pick it up, to your question.
Yes.
I think we're going to see enthusiasts, like you were mentioning to me before, you wear the Meta Ray-Bans a fair amount.
But I wear them when I'm driving.
Yeah, well, that's a thing.
Because the display in the Ray-Ban display, obviously, if you're driving, not the best use case.
Yeah, not intended for driving.
Last night, you did live demos. Some of them didn't go very well, but you're getting a lot of credit for doing live demos. Just very simply, and for transparency, what did go wrong in those demos?
I haven't looked into them. I believe it was the Wi-Fi. But we're trying to have these events where we're not canning them. We know people don't want something that's canned, so we're erring on the side of trying to do it live.
I've got a question from our audience.
Yep.
Ray-Ban display, will it be available for prescription lenses?
Yes.
And why was that important? This is a question that's come up a lot with Ray-Bans.
Well, just we know around 1 to 2 billion people on Earth wear glasses. A bunch of them are wearing them as sunglasses, and then a whole bunch of folks are wearing them with prescriptions.
Meta Chief Product Officer Chris Cox speaking with Bloomberg's Ed Ludlow there. And some of those stocks that we'll be watching at the open here in Japan as well. Intel suppliers in focus. Nvidia announcing that $5 billion investment. The likes of Tokyo Electron and also Lasertech will be in focus. That lagged the rally in Chinese chip names. Lasertech gets around a third of its business from Intel, and its U.S. traded shares closed about 8% above the Tokyo stock price. And don't forget, we have BOJ policy decision today after August core CPI slowed to a gain of 2.7% year on year. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens and bracing for some potentially big moves in Asia's tech sector after Nvidia's $5 billion investment into Intel. Of course, we have Intel suppliers across the Asia session, but Bell, of course, is also Bank of Japan Day. No fireworks expected there, but happy Friday. I mean, it's been a busy week.
What a week it's been. Plenty of central bank action, and also you can take a look at what happened in the US session, how that sets it up. You said no fireworks at BOJ, certainly fireworks on Wall Street, because we had the NASDAQ, the Russell 2000s, the Dow Jones, the S&P 500, all coursing to fresh record highs.
Pretty unique. 25 times only that's happened this century. Will that lead to another pop here in the Asian session? Of course, the Nikkei is already around record highs. We saw the Japanese yen weaken against the U.S. dollar towards that 148 level. We are now seeing the Nikkei coming online to gains of 0.7%. And this as we head towards the Bank of Japan policy decision expected to hold by all 50 economists surveyed by Bloomberg. But we're watching the political landscape here as well, as we have new contenders in the LDP leadership race, including Sanae Takaichi, who's seen more as a pro-easy money. We're looking at the 10-year yield surpassing that 160 level as well. Of course, we continue to see those gains being wiped out in the JGB space after that 20-year auction was pretty solid earlier in the week. Take a look at how South Korea is also coming online. Big tech moves in that market as well. So do watch out for names like SK Hynix, Samsung as well. But the Kospi has already been trading around record highs. We're seeing very little move early in the Asia session, but the Korean won holding at that 1388 level.
Yeah, and actually picking up on that currency theme, taking a look at the Aussie dollar this morning, again, fairly flat, but you are on track for around half percentage point loss over the course of this week. It has been that story. A little bit of dollar strength coming back into the session. What also tracking today is what's happening in yields, because you are just seeing them moving higher across the curve, really. But that does track what we had in the US session, because you had initial jobless claims. We actually saw a drop in those, so reversing that trend we've seen over the past few weeks. Equities-wise, I mean, ASX 200, of course, not a tech-exposed market, but still we're taking in perhaps that tone from Wall Street, moving higher at the start of trade. What's also to note is more on the monetary policy side, because Bloomberg got access to some documents from the RBA. They'll be published later today as well, but essentially taking a look at what is the so-called neutral rate and where that should fit. Some of the modelling actually shows that needs to be sharply downgraded. What does that mean for rates? It means maybe the cash rate also needs to be lowered quite significantly. But of course, eco data, we had the jobs claims yesterday in Australia, and we're still seeing a very tight labour market there. But yeah, ASX 200, again, high today, and a very strong session Shery has been discussing on Wall Street overnight too.
Yeah, Annabelle, let's bring in Naomi Fink, Chief Global Strategist at Amova Asset Management, with her views of where the markets are headed, because as we mentioned, we had some big tech moves, but at the same time, we do have a BOJ policy decision.
Well, it's firstly good to be here, and secondly, I think that the policy decision itself may be less in focus than the statement thereafter and the press conference, just because it may be rather difficult to make any moves, especially ahead of the event of the LDP leadership contest. However, we have seen some pretty good signals in the economy, real wages going positive again. And while we have seen some slightly subdued signals on Tokyo inflation, we get inflation figures out too. So we'll have to see that inflation continue to become more subdued for the BOJ to kind of hold its line of waiting to see. Eventually, it's likely that the BOJ will have to make a move. Inflation is its bailiwick, and that's what households claim. I mean, that's what households are suffering from right now. So most likely we will have to see the BOJ hold its line that it still maintains a hike bias.
Yeah, core CPI today coming in for the month of August at 2.7% growth, which I believe is the slowest since November of 2024. But really, central bankers here are also having to contend with what's happening in the U.S. and the Fed rate cut and the potential of more cuts to come this year.
Well, I think the Fed rate cut was widely anticipated. But the thing is, reading the statement, it doesn't appear as though the Fed is biasing its view in favor of softer jobs. Of course, it did acknowledge the softer jobs, but the risks, it said, are balanced because inflation is still coming out on the higher side. So I don't think we should take for given that we will just get a string of rate cuts pretty consistently from here from the Fed. It's very much in wait and see. As Powell said, there is no risk-free path at the moment.
What does that mean for markets here in Japan? Because we have seen, of course, stocks at record highs already, and we continue to see the exuberance over tech stocks. Given that we are headed towards potential more normalization coming from the BOJ, is that the push-pull dynamic that we'll continue to see?
So I think the one dynamic in stock markets globally versus bond markets that's going on, that's maybe unhelpful, is that they're pricing in two different worlds. Yes, on the stock side, it's exuberance. It's we are at peak earnings and we can still go higher. But that's not the same world in which the Fed cuts 6 or 7 times consecutively. I mean, in that instance, then we have a much higher probability of recession. So these are two separate things being priced in, and it's unhelpful for money managers because usually what we like to do is get diversification, and having that pro-cyclical versus counter-cyclical asset is very helpful. Now we can't really rely on that, so people are scrambling to find uncorrelated or negative correlated assets to diversify their portfolios.
Yeah, and Naomi, of course, that's been gold. You know, that's been one of the standout assets. So what do you look for right now?
So I would say that because we are just still in a period of very high global accommodation, liquidity, there's a lot of money going into assets in general. So maybe that's one of the reasons why we're really struggling to find uncorrelated or low correlated assets. So maybe what the name of the game could be is not necessarily to try and eliminate volatility, but just to try and really buffer the downside in the event of a cyclical downturn. So what I would say is don't leave the market, stay invested, but perhaps give up some of that momentum premium to look elsewhere than in what's hot right now. So yes, some of the U.S. tech are likely in the long term to continue performing well. The only thing is, if we get a recession in the interim, what are we going to do? Well, I would say just pick the names very carefully, pick the ones that you have high conviction in, and then look to other markets such as Europe, such as Asia Pacific, such as Japan, that offer things that are not that correlated with U.S. cycles. Like in Japan, domestic demand, there's a structural recovery underway. In Europe, there's new commitment to fiscal easing, and then there's a common defense fund. In Asia Pacific, central banks are being able to cut rates in contrast to what was in play 10, 20 years ago to respond to economic softness. So long term, that's going to be positive for assets. So I would say diversifying on the margin is a really good idea right now.
And how much are you putting toward China there? And I think one of the most interesting things about the China market rally we've seen is just such positivity in the stock space, but the economic picture can look quite fundamentally different. What's your view?
Well, I think there's the macro side and then there's the technical side. On the macro side, yes, there's domestic economic softness, but that's a pretty known commodity. What's happening now, though, is that the known commodity, the property slump that's dragging down domestic demand, for instance, is somewhat starting to be offset by new demand for financial assets, for stocks. And some of this anti-involution story has to do with reducing spare capacity. So that might make the assets more desirable. The challenge, of course, for China is that if you undergo anti-involution and you're cutting capacity, you also don't want to have a huge spike in unemployment. So you need to do something to stimulate consumption, to create those jobs. And I think right now they're talking about services. It's vague at the moment, but probably what China needs to do from a macro perspective is try to offset the impact that it might have on the household, because you don't want the household to get any more disappointed and engage in precautionary savings than they are now.
Goldman Sachs saying buy on the dip when it comes to Chinese equities because valuations are not necessarily stretched. Could that also get a help from this tech boom that we're seeing, from the AI exuberance? And there are so many names across China right now that Beijing wants to really boost as well.
So, yes, that's a point. I think valuations are not particularly stretched, especially if we compare them with the U.S. valuations. I think a lot of global investors cite more supply concerns, technical concerns. You know, how do I gain exposure to the rebound in Chinese stock? It is, of course, possible. There are vehicles to do this. So I think it might be a mistake not to be invested at all in China, because it is there are some recovery signals here and there, and it is a big force in the region. And some of what was interpreted as negative for China, you know, the decline in prices, some of this is actually investment-specific technology, huge investments that were made in areas such as renewable technology that has brought the price of energy down, and that's been a positive for the consumer surplus. And you know, that's to some degree been exported abroad to the region, which has helped central banks make rate cuts when they need to. So some of this is a positive. So I would say that there are some positives in China that are being overlooked.
Yeah, certainly a sort of a fundamental re-rating we've seen around China's tech capabilities as well. But that was Naomi Fink, Chief Global Strategist at Amova Asset Management, joining us from Tokyo this morning. And just have been speaking, we've actually had some of the suppliers coming online this morning to Intel. And the one we're watching in particular is LaserTech. This is a company that takes nearly 28% of its revenue from Intel in the US. So you can see there quite a big surge, but a surge for other suppliers as well. Still waiting for Biden to also start to trade, but that takes a 20% revenue from the company as well. But the overall deal, of course, is that Intel's announced that Nvidia has agreed to invest $5 billion in the company in Shery, something that even just a few years ago would have probably seemed unthinkable.
Yeah, so we're watching those big moves in the Asian session with laser tech almost gaining 9% right there. But also here in Japan, we're watching Sumitomo Mitsui. We could be considering increasing its stake in Jefferies. According to people speaking to Bloomberg, the two firms are in discussions to merge parts of their equities businesses in Japan, potentially through the establishment of a joint venture between SMBC Nikko Securities, also Jefferies' local operation, and Sumitomo Mitsui could be investing more than 100 billion yen to raise their ownership to about 20% or so. Also, do watch out for those automakers across South Korea. Hyundai Motor, for example, raising the revenue forecast for 2025, paring back profit expectations, accelerating investments in the U.S. to mitigate tariff costs. That boosting spending in the U.S. to get around tariffs, very important for Hyundai, of course, and it's bolstering their hybrid lineup as well in the country to stoke demand in that market. They're targeting annual sales of 5.5 million vehicles a year by 2030. We have more ahead on the Asia trade. This is Bloomberg.
The two technology teams have been discussing and architecting solutions now for probably coming up to a year. The two architecture teams, well, it's three architecture teams, are working across, of course, the CPU architecture as well as product lines for server and PCs. And so the architecture work is fairly extensive. And the teams are really excited about the new architecture. And so the teams have been working a while, and we're excited about the announcement today.
Nvidia CEO Jensen Huang there during a conference call with his Intel counterpart Lip-Bu Tan. Bloomberg Intelligence thinks Nvidia's investment in Intel marks a vote of confidence and is a critical lifeline for America's only advanced chip maker. Senior semiconductors analyst Kunjan Sobhani joins us now for more on this. How much of a strategic win is this for both companies?
Yeah, it's really a win-win for both. Definitely a strong lifeline for a struggling Intel. With this, in the data center arena, Intel has an option now to sort of leverage Nvidia's dominating AI accelerator ramp, so where it did not participate. In fact, Intel was sort of the only compute player which was missing out on all of the AI server revenue ramps. So it can get exposure to that market significantly and scale as Nvidia ships, x86-based AI server racks. On the PC side, it's opportunity for Nvidia, opens up a brand new TAM. Today, Nvidia specifically plays in the gaming and the crypto side of the PCs, but this integrated GPU and CPU chiplet will open up about sort of close to 150 million units per year market for Nvidia. It also helps Intel a lot here, to compete against Nvidia's strong GPU and plus CPU offering, helps Intel to bolster their already dominant share in this market, and really gives that sort of branding approval to have Nvidia solution along with an Nvidia solution both in AI PCs and in the data centers.
It's important, though, I guess, to emphasize that these aren't foundry orders for Intel. So what's the significance of that? And also, what does it mean for the overall turnaround efforts that Lip-Bu Tan has ahead of him at Intel?
Yeah, they have not said anything about that there's being any involvement of the foundry portion or the manufacturing portion in this deal. But if you just, map out logically, this gives Intel a seat at the design table within NVIDIA's roadmap, and similarly gives a seat to NVIDIA and Intel's roadmap. So, if Intel foundry efforts continue as on track, if Intel can prove that they are a legitimate source, this does open up doors for NVIDIA to use Intel manufacturing in the U.S. going in the forward in the future years, right? This opens up the avenue that NVIDIA could be a big major customer, while not today, but this could come in the future as long as Intel can prove and deliver that it can deliver on the promises.
Yeah, and I guess we saw that optimism really reflected in that huge share price surge for Intel as well. That was our BI senior semiconductor analyst, Kunjan Sabani, joining us. Thanks very much. But also shifting to trade tensions and what's going to be happening later today, because the all-important phone call. President Trump has indicated he may further extend the trade truce with China when he speaks later on Friday with President Xi Jinping. Now, this call is going to be the first direct engagement since June between the two leaders, and the issue of a TikTok sale should be high on the agenda. Let's bring in our Chief North Asia correspondent, Stephen Engel. So, Steve, I mean, TikTok, yes, the main talking point perhaps, but what's being teed up right now?
Well, obviously, TikTok has been pushed to the top of the agenda because it's a more immediate deliverable. We can talk about the other big, more contentious trade issues and national security issues in just a bit. But TikTok is obviously something that Donald Trump has sort of flip-flopped over. Originally, he was against it. Then he saw that he claims it helped him win the election with younger voters. And he also was quoted as saying it could be worth tens of billions of dollars, the U.S. operations. And he said, quote, "We'd hate to see value like that thrown out the window." So he's sort of eager to make this deal and make good on the pledges to put it in a U.S. hands. And he said the new consortium of owners will be all American investors. So we do know that it's Oracle, Andreessen Horowitz, as well as Silver Lake Management. What we don't know is, will it require a different and new algorithm? What happens with the data, et cetera, et cetera? So there's all kinds of national security issues as well that China has raised as well. Will this be a licensing agreement as well? Will ByteDance hold some percentage? We're hearing that they can hold no more than 20% of the new arrangement. But again, there are a lot of, I think the devil will be in the details, to use the overused cliche. But again, we'll probably get more of that if those two leaders on the call, which will be at 9 p.m. Hong Kong time tonight, 9 a.m. Friday East Coast time, as rightfully said in the open there, will be the first direct contact between those two leaders since June. They have a lot to talk about, including the trade truce, which is currently expected to expire on November 10th. But as Donald Trump said today, that could be, under the existing terms, be extended.
Yeah, so let's talk about those other issues that you mentioned. Could we see any deliverables or peace offerings?
Yeah, I think there are going to be some gestures made, and we're already getting indications for, like, the Financial Times is reporting that China has decided to end their investigation, the antitrust investigation into Google's Android. And that is seen widely as a gesture because, again, that came up the last time, when the tariffs were being raised. China launched this investigation into the dominance of Android. But, the analysts that we've spoken to essentially say they don't really have a Google, that is, a meaningful presence in the mainland China market anyway. So this is seen as just removing a roadblock, as an easy gift, if you will, to the United States, as both sides try to look for deliverables and also ways to get what they want and offer something in exchange. Now, soybeans is the other issue that could be talked about, because that was a key component of the first trade deal that Donald Trump negotiated in his first term. That fell apart because of COVID, and China is simply not buying the agreed upon or promised amount of soybeans. And we saw soybean futures fall overnight. We're seeing a little bit of a tick upwards right now. Brooke Rollins, who's the U.S. Agricultural Secretary, on the sidelines of all these speculation, is also signaling that an aid package could be in the works for U.S. farmers, because they are not seeing the Chinese buying as much as they would expect. And as the Chinese have diversified their sourcing pipeline to places like Brazil and the like. So soybeans could be high on the trade, alleviating the trade tensions. And then rare earths will obviously be discussed as well. And the latest data from Chinese customs is that there was a record amount of rare earth products being exported in August out of China. So that's a good indication that China has opened up the floodgates on their export controls for the likes of rare earths and rare earth magnets.
Stephen Engel, our Chief North Asia correspondent, there with the latest on what to expect from the U.S.-China negotiations and that call between President Trump and Xi Jinping. We'll be delving deeper into that with CSIS. This is Bloomberg. Take a look at how Japanese assets are trading. We're taking a look at the tech sector, especially when it comes to laser tech soaring at the moment. Of course, we heard that Nvidia is investing $5 billion in Intel. Laser tech gets about 28% of the revenue from Intel. You can see the Nikkei now gaining ground, and of course, we're already at around record highs. We had seen some weakening against the Japanese yen against the U.S. dollar in the overnight session. We continue to be pressured past that 148 level. Of course, that on Bank of Japan Policy Day. Our Japan economy and government editor Paul Jackson joins me here with what to expect. No change expected from the BOJ, but we did see, again, those inflation numbers for August coming in decelerating, but still pretty strong.
Yeah, I don't think it's a major change to the overall inflation picture. In fact, the slowdown from around 3.1 to 2.7 is largely down to government subsidies for energy, as the government tries to give consumers a bit of relief from those inflating prices. So today's decision, Bank of Japan, going to hold, but we think they will be raising rates by the end of the year. That's what we've heard and reported. So the key question really is, does Governor Ueda give a hint about October or not? October looked like the most likely month just a few weeks back. And when you think about it, you've got the inflation. The inflation's ready for a hike. Wages are looking good, solid growth there. So that checkbox is ticked. We've got a trade deal with the US now, so that uncertainty is removed from the picture. GDP also looking good. So the things are in place there for a rate hike, but we've got this leadership change taking place in the ruling party. So with that political instability, that favours holding. So there's that argument there. You could also argue that with some of the candidates perhaps not totally in favour of rate hikes, that maybe the BOJ would like to get it out of the way in October before the new leader kind of like digs in.
And we had more announcements about running in the leadership election.
That's right. So we're expecting Sanaya Takaichi, who has in the past criticised the BOJ for raising interest rates. She will be outlining her policies today. And it looks like she's playing a pretty smart campaign. Local reports already suggesting that she's going to opt for a lower income tax break, raising of tax exemptions, and also providing some form of handout, so there is a bit of continuity with the Ishiba administration. Looks like a smart play as she tries to play a smart campaign.
Bloomberg Japan economy and government editor Paul Jackson here with a preview of that Bank of Japan policy decision and, of course, a political landscape here in Japan. More ahead. This is Bloomberg. Seeing gains across markets in Asia, especially with the Nikkei at record highs, and this, of course, coming on Bank of Japan Policy Day. We got core CPI rising only 2.7% year-on-year, the slowest growth since November of 2024. But still, we contend with high food prices, rising wage costs. Will that change the calculation for the Bank of Japan? No change expected today, but perhaps a rate hike in October by some market watchers. And take a look at the Kospi, not doing much at the moment, but this as we continue to keep our focus on those tech names, on Nvidia's $5 billion investment into Intel. We're watching those Asian suppliers, the ASX 200 gaining 0.6%. Annabelle, as we also had some employment data miss in the previous session. So we'll continue to watch those rate cut expectations for the RBA as well.
Yeah, something really very much in focus. And what else is interesting? You mentioned, of course, the rally we've seen in tech stocks, where also that race between the US and China is now heading is to brain-computer interface technology, because we have seen US leadership in this cutting-edge field that's now being challenged by Chinese startups. With Beijing's support, Chinese companies are building an industry analysts say could grow 20% annually. Bloomberg's Amber Tong joins us now for more. So Amber, I think we can also just get started maybe. What exactly is brain interface, brain-computer interface technology, and why is this so important as well for China's leadership?
Yeah, so brain-computer interface essentially captures and translates brain signals, so people can control and use electronic and interact with electronic devices just with their minds. And so far, it's mostly being used in clinical settings, being given to people who are paralyzed or have otherwise lost essential functions so that they can communicate with the world and regain some of those functions. But you can really see huge potential for a wide range of uses. One of the startup founders I talked to described it as the new kind of smartphone, a real paradigm shift for how people may communicate. It can spawn a whole new class of consumer products, and it may even accelerate the development of new robotics and AI, according to the people I spoke to for the story. So this is clearly an area that has huge potential beyond, well, in healthcare and also beyond healthcare. And it is one that has been compared to the level of AI and chips and semiconductors. So it's clearly a very high stakes race and one where China does not want to fall behind in.
So how do they compare to Elon Musk's, for example, the Neuralink?
That's a great question. So there are actually a wide range. There are many different types of BCIs depending on where in the brain they're implanted, how sensitive they are, or how fast they can decode and translate those neural messages. And Neuralink is still by far the leader in the most invasive and pretty complicated kind of BCI. But China is really catching up very quickly. Over the past year, we've seen a number of Chinese startups give updates from their clinical trials, where patients who are paralyzed are able to control bionic arms or even start to move a little bit with the help of exoskeletons. And in one particular example that we note in the story, StairMed, Shanghai StairMed technology had showed that their patient who was given a very invasive BCI device comparable to what was given in Neuralink surgeries. That patient he lost all his limbs, but he was able to play chess, play Mario Kart. He was able to text his doctor using just his mind. So it is a very interesting time for BCI in China, and we see that these companies are planning to quickly scale up their clinical trials. So next year we may see dozens of patients implanted with BCI and see more clinical updates come out over the next year.
So I guess you have the trials, and then you've also got the regulators that need to catch up and be happy for this to become something that's commercially available as well. When do you expect that to happen with the first brain implant? For sure. So regulators are, at least from my interviews, they're appearing very open and eager to work with companies to speed up the process and remove any red tape or bottlenecks. And from what I was told, the first BCI that's implanted inside the skull, at least in the head, could be available as soon as next year. But it will be in China. But it will be a very pared down, simple version of BCI that will be relatively slow, and maybe patient can only use it to perform simple tasks, and the use will be very limited. And as for the more complicated versions, we may have to wait a few more years to see them. All right, well, as we said, it's certainly a market with huge potential, but I also think it's got some pretty scary implications as well, at least from the outsider's perspective. But that was Bloomberg's Amber Tong there. Thanks so much for joining us. We'll have plenty more ahead on the Asia trade. This is Bloomberg.
So what we're doing, and we're speaking to President Xi on Friday to see if we can finalize something on TikTok, because there is tremendous value, and I hate to give away value. And we're doing it in conjunction with China. But we are getting, the United States is getting a tremendous fee plus, I call it a fee plus, for just making the deal. And I don't want to throw that out the window. We're pretty close to a deal. We may do an extension with China, but it's an extension based on the same terms that we have right now, which are pretty good terms.
That was President Trump speaking ahead of his Friday call with his Chinese counterpart, Xi Jinping. And joining us now is Lily McElwee, Freeman Chair in China Studies and Adjunct Fellow at CSIS. She's also President and CEO of the Phoenix Committee on Foreign Relations. So, Lily, thanks very much for your time this morning. We can start off with TikTok. I mean, it's very high on the agenda for this call between Presidents Trump and Xi. It's maybe one of the less thorny issues that they need to sort through. But what are you expecting in terms of progress on that front?
Absolutely. Thank you for having me. We have seen President Trump hone into TikTok as an issue where a deal can be made. And we've seen both sides, after repeated negotiations, tease the outline of what a framework deal on TikTok could look like in terms of U.S. ownership of the app and a licensing of the algorithm from TikTok's Chinese owner ByteDance. I believe this will be announced during the call, and implementation will be interesting to watch. But TikTok is an area where the administration has focused in its negotiations with China. There are many other issues, as you had mentioned as well.
And beyond TikTok, then, what are the other issues that you think are going to be most likely to be discussed? It's sort of difficult because, of course, this is the first call they've had going, or first direct communication in several months. It's probably important, I guess, that they continue to leave that door open for further talks.
Absolutely. And the U.S.-China relationship is a complicated bilateral relationship with security dimensions, diplomatic dimensions, and military dimensions. The economic realm is where President Trump has taken his focus so far in his second term. And, on the screen, we see tariff talks, soybeans, critical minerals. These are all issues that are have been discussed in the 4 rounds of trade talks that we've seen so far between the U.S. and the Chinese side. My sense is that the Trump administration is focused on issues close to home, a trade rebalancing, TikTok as an app that millions of Americans use, and fentanyl as an issue that affects many American families as well. Those broader intractable issues in the security domains, diplomatic domains, remain to be hashed out and are just more difficult. So I think the Trump administration is looking at issues that can be resolved in the next year.
So where are we on those fundamental issues, on the realignment, rebalancing of trade? I mean, all of these issues over TikTok and issues over U.S. tariffs, the Geneva talks, the Madrid talks. I mean, we've had these incremental changes, but these were all very short-term issues, right? But the fundamental view of the Trump administration is that it wants to change the face of global trade. How much of that has actually been achieved?
Well, that's an excellent question. And I think, when we think about the U.S.-China trade relationship, it goes beyond the trade balance. There are other issues such as market access issues, non-tariff barriers that have been discussed by many administrations past. But here, I think President Trump is looking for purchase agreements from China, particularly as they affect farmers, as was discussed earlier on the show. I think that on those issues, we've had them before, but we're close to getting to new purchase agreements like that, especially with a deal related to TikTok on the horizon. I think we are going to see some concrete breakthroughs, but I don't expect anything major. I think these are discrete issues, whereas the broader trade relationship and broader rebalancing is something that's probably going to remain an issue throughout the administration and future administrations, considering the Trump administration really does see tariffs as a tool of economic and diplomatic leverage.
How much decoupling has there been in the tech sector, both because of the export controls from the Trump administration, but also because, of course, Beijing is trying to focus more on homegrown technologies? We are seeing this clampdown against Nvidia's access to its market as well.
Absolutely, it's a great question. I think in the trade domain, we've seen a dramatic reduction in Chinese exports to the United States. In the technology domain, it's a quieter domain than trade. Trade gets most of the headlines, but technology controls on both sides are continuing. We've seen the Trump administration add many Chinese companies to its export control list. On the Chinese side, we've seen rare earth export controls. And as you said, we've seen Beijing actively tell Chinese firms that even though the U.S. government has now allowed some Nvidia chips to resume sales of some AI chips to China, Beijing is actively telling Chinese firms don't buy them. So there are these agreements that are made and concessions on each side, but I think the broader tectonic shifts in both Beijing and Washington toward a technology decoupling remain.
Yeah, it's quite incredible, really. In the week of these talks, you saw that call from Nvidia for companies to stop buying the RTX Pro 6000D chip. But what then constitutes a win for Beijing out of these discussions?
So I think that Beijing is seeking tariff relief, or at least some promise of not going to 100+ tariffs, as we've discussed before, which would essentially be a trade embargo. I think that a focus of Beijing's from the Biden administration to now has been paring back technology controls, whether it's export controls or investment screening. The U.S. is, in a bipartisan way, moving toward a technology de-risking that Beijing really doesn't like. So putting some boundaries, some guardrails on those technology controls would be a win for Beijing. Of course, a win would also be strategic agreements on Taiwan. These are, I think ambitions and reality are different here. But especially, I think, in the technology domain, that would be an area where Beijing is pushing to put some limitations on the technology restrictions from the U.S. side.
Lily, thanks for your time. Of course, that call between President Trump and Xi later today, very keenly awaited. That's Lily McElwee there, Freeman Chair in China Studies, Adjunct Fellow at CSIS, and President and CEO of Phoenix, or the Phoenix Committee on Foreign Relations. We'll have plenty more ahead on the Asia trade. This is Bloomberg.
AIA Group CIO Mark Konyn says while China's property crisis is still hanging over the economy, market sentiment is clearly improving with foreign investors seeking opportunities. Konyn was speaking at a subscriber event for Bloomberg's The China Show after a recent visit to the mainland.
Sentiment has definitely changed on the ground, that's for sure. I don't think we've seen the back of the onflow, the after effect of the slowdown in residential property. That's still a spectre which is hanging over the consumer. But we've clearly seen a mobilization of resources and an alignment of policy, which has really galvanized confidence. And it's palpable. You can see it. I spent a day in a workshop looking at China logistics and data centers. Extraordinary growth. All of the things that we've been talking about, Steve mentioned 35 years, all of those things that we always talked about on enormous scale, they're now coming back into play. And there's a real level of enthusiasm and optimism around that. And dare I say it, you're even starting to see foreign investors come back to China. You're starting to see some of the big global pension funds, the sovereign wealth funds, starting to come back in and realize that there's opportunity there that they should be participating in. And there's a sense that, if this is we're now scraping along the bottom, this is the right time to be rebuilding positions.
You've invested in Hong Kong for a long time. The Hang Seng Index. Can I trust this one? Because we've had our hearts broken a few times in just 18 months, let alone the time before that.
Trust is a big word. I mean, can you make money? Yes. I think that's more the point, and the fact that it's driven by policy as well. So it's really an alignment of policy and action, and getting the IPO market started up here again, and it's phenomenal. On a global level, and it's really infused investors once again. So yes, you can trust that this is real, and there's a lot more to come.
Do we regret not taking advantage? Do you think we will regret not taking advantage of the treasury yields on the table, especially when we think about the end of U.S. exceptionalism, the role of the dollar? Like, where is your head around the entire conversation?
Yeah, so firstly I would say that we don't trade the long end. We don't get rewarded for taking rate risk. So what we do is try and we hedge out as much rate risk as possible. Rate volatility costs us capital, so we try and neutralize that as much as possible. But we do take tactical positions, and we have, during the course of this year, there have been opportunities because of the volatility. And I think that's been one of the sort of trademarks of the market this year. You have tremendous volatility in rates across the curve. I think where we sit today is that most of the action is going to be at the short end. That we're going to see the short end give up, but the long end could go up a little, but not significantly so. So I'm not sure we would be aligned with that and taking more tactical moves. We're very happy with rates where they are at the long end.
A large book of your policies are dollar-based.
Yes.
How does the overall confidence or lack of confidence on the dollar longer term mean for your sales and for your investment opportunities now?
Well, typically when we've seen dollar weakness in this region, it's been positive for the economies across the region. It gives a little bit of headroom in terms of policy flexibility. But what we really want is we want to see liberalisation of the capital markets across this region. The biggest constraint we have in terms of growing our business is, can we find enough deployment? Can we find enough assets to deploy? And if we look at the capital markets across this region, extremely constrained. So here's an opportunity, slightly weaker dollar in terms of the trend. Will we see the liberalisation that we're expecting? Will we see taking advantage of that headroom? It looks like we're going to be disappointed again. So, yeah, so out across the region, China's a big play. This move for offshoring production to avoid the impact of tariffs, sort of aligning with what we saw in previous decades with Japan after the Plaza Accord. Right. That's the sort of thing that we're very much focused on, because it's not the same story being replayed again, because these tariffs are rolling out across the whole region. So it's very, very finely balanced.
That was the AIA Group CIO Mark Konyn there, speaking to the China show anchors David and Anna von Mann. But taking a look at some of the big movers in the session so far. Yesterday, one of the key themes on Wall Street was the Intel move that we had. I mean, it was a huge surge in the stock, and we had it after the company announced that Nvidia is going to be investing $5 billion in the company. So the two companies are going to be co-developing chips for PCs, also data centers. And so we're watching some of the big suppliers. So the likes of Lasertec, for instance, they take around 28% of their revenue from Intel. Biden as well over in Tokyo, that takes around 20%. But overall, we are seeing these suppliers mostly moving to the upside here. But let's also take a look at some of the other stocks we're going to watch when markets open in Hong Kong and mainland China in just over half an hour's time from here, because Chinese chip stocks, I mean, they've been one of the biggest gainers in the session over the last few weeks, but they do face a test at the open. Given we've had these names in the Japan names, the question is, how does that play out into Chinese markets? But certainly overnight we did see some moves with the Golden Dragon Index, for instance, closing down a little bit as well. But what else we're tracking is also Huawei's announcement and how it's planning to rival Nvidia's AI chip capabilities. So that's something else that played into the session yesterday. Baidu as well, after Goldman Sachs raised its target price on the stock. Over in Taiwan, the Intel narrative might continue to play out and track the rally in Japanese supplies. Again, TSMC's ADRs, they rose in the US session. It has about 3% of its revenue from Intel and 13% from Nvidia.
Yeah, and of course, we have seen that incredible rally in the U.S. market, given that investment into Intel. Take a look at U.S. futures, not necessarily doing much, but after all major benchmarks in the United States hit record highs for the first time since 2021. It was a very rare feat on Wall Street. And you can see A50 futures right there closing to the upside of 0.2%. I mean, Bell mentioned the volatility that we saw in the overnight session with U.S.-listed Chinese stocks. Incredible volatility when it came to the CSI 300 in the previous session as well. Goldman Sachs, though, saying buy the dip, given the valuations are not necessarily stretched in the Chinese market. TAIEX futures at the moment gaining 0.4%. And this, of course, as we head towards the Bank of Japan policy decision, and this as the Nikkei continues to trade at record highs, and no fireworks expected from the BOJ today, Annabelle, but we did get inflation data earlier today showing that core CPI slowed to 2.7% growth year on year, which is the slowest since 2024, but still remaining pretty high overall. This is Japan's inflation core CPI, less food, less energy, still above the U.S. And historically, this doesn't necessarily happen unless Japan is hiking the tax rate or some idiosyncratic move. So when it comes to the Bank of Japan policy decision, we're not expecting this deceleration in inflation to have any impact. But what we'll be watching for today's press conference is what happens next, the October meeting and the December meeting as well.
Yeah, actually, October is seen as maybe one of the potentials when we see a hike from the central bank. Otherwise, most are saying it could be by January of next year. So certainly that does appear to be in the offing. And you mentioned those inflation figures. We did hear from JPMorgan Securities, for instance, in the last hour, saying that if you stripped out the effect of subsidies from the government, actually you'd be well above the BOJ target today. And it's interesting as well because you made the point, Shery, about how you've got this leadership race that's taking place, and all of the candidates are promising to spend more money.
Yeah, no matter who gets elected, although the focus has been on Sanae Takaichi, who's pro-easy money, perhaps a continuation of the Abenomics, but no matter who wins, the conversation right now is about more fiscal spending to come from Japan.
Yeah, that's right. All right, you're going to be front and center, of course, Shery. You've got that BOJ decision coming up. You'll be joining us back again, of course, with all of the coverage of that. But that's it from the Asia trade today. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show is next, and this is Bloomberg.